Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Hi, Kelvin. Great to have you on the show.
Sure, my pleasure. Good afternoon to you, Brian.
Now, Kelvin, before we get your insights, let's take a quick look and see how markets in the region are performing. We'll start close to home with SGX. It's at 3,144.97. It's up 1.14%. Across the causeway at Bursa Malaysia, it's 1,630.02. It's up 0.43%. Now, across the region, we've got the Nikkei at 30,180.11. It's up 0.89%. Shanghai Composite is at 3,464.33. It's up 0.55%. The Hang Seng is at 29,472.50. It's up 1.51%. Bucking the trend is the ASX 200, which is down 0.6% at 6,750. And rounding off, the Kospi is at 3,070.62. It's up 0.76%. Kelvin, what's your view on market performance today?
Yes, so what we could see is a very kind of a positive feedback loop. That is all thanks to US Federal Reserve FOMC yesterday. So what we could see early on is a quick recap. Okay, prior to the FOMC, we see a bit of scare, especially on the technology and growth stocks, which if you look at the Nasdaq 100 as a proxy, the Nasdaq 100 during the intraday actually declined close to negative 1.5%. But after FOMC, actually managed to actually close with a modest gain of 0.38%, then definitely the outperformers will be the cyclical and value weighted. We're talking about the Dow Jones hitting fresh record high together with the S&P. So all this actually thanks to Fed Chair Powell, kind of giving a very dovish guidance to the markets that what the market wants to hear. So it seems to us right now is that the Fed is actually more concerned about markets remaining functioning properly. That means there's no disorderly winding down of or sell off of risk assets, instead of answering the address of this further inflationary pressure to the real economy. So one of the behavior aspect will be definitely during his press conference. So if you look at his press conference, or I would say that the latest dot plot. So on the latest dot plot, right, it actually mentioned to us that it was noted that actually 7 out of the 18 Fed officials actually are in favor of higher rates before the end of 2023, an increase from the number of 5 of 17 that was projected in the prior December 2020 meeting. But given such of an increase of kind of a hawkish voices among the Fed officials, Fed Chair Powell chose to actually downplay this event or this observation during his press conference, saying that it's not a significant amount. And also, despite saying that over here is that yes, they actually upgraded the 2021 GDP growth for this year to 6.5%. So I believe that is the highest reading since 1983 from a prior projection of 4.2%. And also, they kind of say that they are not actually seeing a kind of inflationary risk. Yes, it can be a bump this year to about 2.4%. Before easing off to 2.2% in 2022. So overall, I would say it's a kind of a dovish guidance that is actually helping to juice up risk asset equities as per se at this juncture.
Okay, now given this dovish policy has had a very positive impact, as you mentioned, on equity in particular, how do you see the impact on commodities, specific like gold and oil?
Yeah. So very interestingly over here, you know that we're talking about positive feedback loop, right? So right now what we could see is that this positive feedback loop, okay, it can actually fit into potential higher oil prices, which could actually be a bit of a problem. We're talking about 3 to 6 months down the road. So if you look at from a technical perspective, the November 2020 low on the WTI crude oil, we talk about crude oil futures about this 34 level, this medium-term uptrend is still intact. And right now, we're actually looking at a potential, we got further potential upside, as long as this 62/59 key medium-term pivotal support holds, to actually see it to go higher, to test the next resistance at around 75.80 level. So what we could see over here is that 75.80 level is pretty pivotal. So if you see a break above this level, it could take us up to the 100 level. So if this particular scenario start to play out, we could definitely start to see inflationary pressure start to creep back to the global economy. So in fact, right, let me quote that is that even one of the central emerging market central bank in Brazil, yes, Brazil Central Bank actually hiked its benchmark interest rate yesterday, the first time since 2016, the first time since 2016, citing higher inflation pressure has really started to creep into the real economy in Brazil.
That's interesting. Now,
Yeah.
the Bank of Japan now, because they're having their policy review update tomorrow on their
Yes.
interest purchase program and yield curve control program. What are the
Yes.
things you are looking out for, and what are markets looking out for in general?
Yeah, definitely. Because if we look at a couple of weeks ago, several BOJ key officials has really kind of indicated that tomorrow will be pretty key. Why? Because it will start to actually have this comprehensive review of its monetary policy toolbox or toolkit. So the last review was done in 2016, where they actually implemented this controversial yield curve control to peg the 10-year JGB close to 0%. And in fact, last week, BOJ Deputy Governor has cited that one of the potential comprehensive review, if we were to actually to negate the side effect of the current BOJ monetary policy. So what is this side effect about? So this side effect is in fact the what you call it, the 0-year curve policy, the JGB capping at 0%, talk about 10-year, actually kind of hampered Japanese financial institution and banks net interest margin. So we're talking about revenues that being kind of hampered due to this longer term yields at zero. So if they could actually potentially allow greater flexibility of this 10-year JGB to fluctuate at a wider range, that could actually boost Japanese banks' profits, which in turn could actually we should see further potential rise in Japanese bank shares, which could actually give a kind of a further reinforced boost to this ongoing rotational team plays in cyclical and value, as we know that banks and financial is part of this team play as well. Then the second asset classes or instrument I'm looking at will be the dollar yen. So very interesting, right? Dollar yen right now is hovering at about 109.35, 109/85, which is actually a major descending resistance that is in place since 10 to I would say about 2015, yeah, June 2015 high. And very interestingly, right, the reason 400 pips spike up in dollar yen is being supported by this yield curve spread that is widening between the 10-year US Treasury yield and JGB, the 10-year JGB. So if you were to see BOJ allowing more flexibility of this JGB yield to actually fluctuate at a wider range, we could see this yield differential between the US 10-year Treasury and the JGB 10-year to actually narrow down. So that could actually suck up a bit of bullishness in this ongoing dollar yen pair. So the intermediate support I'm watching for this dollar yen is at 108.15. If we could see a breakdown below this 108.15, we could potentially see multi-week decline to actually test the next support at 106.70, given this its steep uprise move seen in the last 3 to 4 weeks.
Kelvin, once again, thank you very much for your insights.
Thank you, Brian. My pleasure.
Now, we've been speaking with Kelvin Wong, market strategist at CMC Markets on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversation.